This is your ultimate guide to scale your trading on exactly what you need to do start to finish right now to actually fix what's broken in your trading and get to that next level. So whether you're inconsistent at that break-even stage or you are a little bit profitable and you want to actually increase those profit levels, this is for you. I'm going to give you absolutely everything that I know on this, from data to mindset to process, strategy, and then at the end, putting it all together. At the end of this, you will have everything that you need to actually start taking action and getting yourself to that profitable stage. So what I would say is if you are going to watch this, watch it the whole way through and actually take action on each step. So you don't need to watch it all in one sitting. Probably better to actually pause it at specific intervals. When we finish the data section, pause it in there. Do the actions. Move on to process. Pause it there. Implement them. That way you can actually get the most value out of this and actually make a change. I've worked with hundreds of traders, and what I found was I would teach them the strategy and they would learn the strategy, but they weren't profitable. So there's actually much more that goes into being a profitable trader than strategy alone. And it's rarely talked about in the industry. So I wanted to cover absolutely everything that's involved that is required for you to start making consistent withdrawals. You can see we have full course outlined here, all different modules covering data, process, everything inside here, how to input data correctly, data audit that you can complete, go through all of the different Miros on how to increase your physiology, improve that, and then at the end, then tying it all together. So the most important part, once you have everything lined up, we have all of the moving parts finished, we then want to do what's called identifying the constraint. So actually seeing what's broken. So we can go through this process then once we have outlined all of those parts. So grab a coffee, take some time, actually sit down, pause everything else, focus on this, and genuinely, by the end of this, you will be a different trader. So the first place we're going to start is going to be with the data. So we're going to go through all the sections here and really nail this, because this is absolutely crucial if we ever want to think about scaling. So most people already are recording data. Pretty much everyone I know has some form of a spreadsheet or something, but in terms of actually utilizing it to actually make decisions, actually optimize based on the numbers, very little traders I know actually do that. And it's because it isn't really taught. Like you don't really hear about it too much. So we're going to cover these different sections here now and actually show you how you can utilize your data, how you can actually take your trades, record the numbers, and actually make decisions based on that. So the first thing we want to do is make sure that we're inputting it correctly. So this is something that I learned from getting a job at a consultancy company, and I was in charge of data management, and it was insane. Basically, a big part of my role was going through the data and finding ones that were input incorrectly, because that would actually mess the data up. If something isn't input correctly, that data it doesn't get read, it doesn't get picked up. So if we're doing analysis and let's say we have recorded one of those elements wrong, that isn't actually getting added to it. So therefore our data is skewed. So when we make our calculations or input our formulas, the info is off. So our decision making isn't 100%, if that makes sense. What we want to do is make sure that we input it in a way that we're actually able to filter it. You can see here, like what I mean by everything should be input in terms of a select option. So we should be able to actually click it. And again, this is not, we can't do it for everything because stop loss size will be a number, let's say, and certain things we're not able to make select, but as much as we can, try and put those boundaries around it so we can actually click an item as opposed to typing in a number or a word, etc. That makes it so much easier when it comes to the actual tracking and digging out the info. So for instance, like we just mentioned there, stop loss size or pip range, they're difficult to break down. What ways that you can do it is put certain categories around it. So like for instance, stop loss, where this metric here is tracking what percentage of our stop loss got eaten into throughout the trade. So was it 25%, 50%, 75, or pretty much the whole stop loss? Contrasted to how many pips did price eat into our stop loss? That wouldn't really give us much information because every single trade would be different. Whereas this, it's broken into 4 categories. Therefore, we can see, okay, which of our trades only use 25% of our stop loss, meaning that, okay, sweet, we can actually look at those and think, is there an opportunity here where we can go into those and notice any similarities? Because basically these are our trades, these are our straightaway trades. Once we enter, price doesn't actually eat into us, so we can actually have a tighter stop loss and push the risk a little bit more because there's less of a chance that price will actually give a deep retracement. So very, very important when we're inputting the data, have it inputted correctly, one, and then also in select form. So I'll show you some examples of how I record my data. So for all of my setups, I record data slightly differently because, again, each setup has its own nuance and should be treated as an individual data set. So for instance here, this data here is how I record my lower time frame trades. So it's all select. You can see whenever I'm choosing an option, I can click things. I'm not typing in anything. It's already decided. So was a previous day down, and am I buying in the upper or lower half? Oops, that should be like that. And is it in the first or second half of the day? Clicking, etc. Confluences then, which confluences were present, tracking those. Was it a lower time frame reversal, lower time frame continuation, day count reversal, day count continuation, etc. So you see all of these are select. We have to choose the option. This will mean that your data, you can actually utilize it. So yeah, that is one example. Very, very important. And this is another example, different pair. You can see I'm tracking the data differently in this one. But again, each pair will require us to stop and think, okay, what do we want to track? And we will cover that more in a bit. But just wanted to give the example of how we should be inputting the data. Like I can select this. I'm not typing in GBP NZD. Because if I'm typing in GBP NZD, sometimes we might have the dash, sometimes it'll be a capital, maybe there's a spelling mistake. And all of that is setting us up to actually fail, to actually not have accurate data. So make sure we're inputting everything correctly. And then when it comes to actually doing our data, what we want to do and what I do with the guys is have a initial data audit. So we want to, again, I hop on a call with them and I ask them to select questions, but you can just ask yourself these questions. So we want to do like a deep dive and figure out what are we trying to get out of this? Because the biggest thing, like it's crazy in terms of data, is people just record it, but they don't know why they're recording it and they don't have an objective. The only reason we'll ever record data is if we want to make a decision based on it. And I know the fact that, like, okay, if you just step on the scales every day, you will lose weight. So just purely by tracking, we know that we actually will improve our results. But that is just a fraction of it. Like the bulk of the benefits come from analyzing it and making decisions based on that. So this is just the template for the questionnaire that I asked the guys, or the questions. And then from this, then I use this to build the model. So like, okay, which experiments are we going to run? Which are the core metrics that we want to track? Because in data, it's so much more important what we're tracking as opposed to how much we're tracking. Yes, there's merit in having a lot of lots of different frames we can view our trades on, etc. But oftentimes it ends up being more noise than we actually need, and it means that maybe we'll ignore the most important factors. So keep it short, simple, sweet. Do a data audit on yourself. Figure out, okay, what are the different areas that I want to be tracking, and then from there, run with it. So like we said here, there's no point recording data if we're not testing things. The whole purpose is to test things. And I will say it's much easier. You'll have a much easier job, or a much better, like you'll get much more out of the data you're recording if you decide what experiment you want to run before you run it, before you start recording the data. Yes, you can go in and look at all your data, just let's say track 10 things, and then afterwards, after 3 months, go in and see, okay, which patterns can I notice here? But it's much better to decide, what do I want to test? What hypothesis do I have that I want to see? Is it true or not? And then from that, choosing what you track. Because again, yeah, it's just going to be, you're going to have the exact data points that you want to measure. So Right now, what you can do is pick a experiment that you want to run. Like decide, okay, I'm trying to think of an example now. So you could try and, like, a simple one would be, is your trading better, or your system better in the first, second, or third hour of the session? So of course you just track every time you enter a trade, was it in hour 1, 2, or 3 of the session? And then after 50 trades, you'll have some data points. After 100 trades, you'd have really accurate data. And then anything like that, anytime we want to test something, deciding on it beforehand, thinking which metric do I need to track to answer this question, and then just simply doing it. So, give you another example. So this is something I just put together for one of my clients. So for his specific strategy, these are the experiments that we're running. So these are all individual experiments. Each one of these is an experiment. So this one is for optimizing win rate, so tracking specific confluences for his particular setup. So the way the confluences work, and again, we'll cover this more in a little bit, but the confluences are basically things that can be there when we take a trade, certain price characteristics or behaviors that might be there, that can be there, let's say. They don't have to be there, but we want to track when they are there, what is the win percentage, what is the expected value. So these are just specific ones for his one. You can again have cold volume at the extreme, false break of the monthly level, double break of structure, anything that doesn't have to be there. It's not in your rules, but it can be there. And we want to just track, okay, which combination of these actually leads to the highest win rate. Expected value, the most important metric in all of your data. So this is an expected value calculator. This automatically calculates it. You don't need it to be automated. You can just do the calculation yourself manually. Expected value is the average win times win rate minus average loss times loss rate. So do that calculation, have your data. You want to, when you're calculating expected value, what you want to track, you want to have some metric where you're tracking the with numbers, not a click amount, with actual numbers, the average or let me show you, it's easier to show you. So in this database here, you can see here, so we're tracking the actual or, so how much did price actually run? And then from that, we can then gather the average. So let's say if I put in this 3, the average goes to 1.5. If I make this 5, the average goes to 2. So out of all the trades that we're measuring, what is the average win? And what you can do is actually filter for wins and losses, and that will give you it separately. So you go here, and then we want to see win is checked. So result is win. So we can see our average win is 2.67. And then if you measure the loss, okay, there's no, this is an empty database. You filter for losses, and then you'll see the average loss. And then, yeah, that gives you your averages. And then from that, we calculate our expected value. And the expected value is literally what tells us whether our system is profitable or not. We have to know our expected value. If we don't know the expected value, we don't actually know if our system is profitable or not. It could just be some big trades are actually causing us to win. This number here, this EV, this is the formula for it. But this number here, if it's above 1 or above 0, sorry, anything above 0 means the system is profitable in the long run. Anything below 0 means it's not. So over 50 trades, if it's even 0.2, we know that system is net profitable in the long run. As long as we stick to it and just keep rinsing and repeating, that system is profitable. So this expected value would be extremely, extremely good. So that would be 1.35, an expected value of 1.35. What that means is, on average, this system over 20 trades, over 50 trades, on average will return 1.35% per trade. Of course, it doesn't work out like that. Like, you have losers and then you have winners, but on average, you can expect to make 1.35%. Super, super, super important. And then taking it one step further is critical. Like, this is where the real money is made, where you can know your expected value for each of your specific setups. Being able to define what's the difference between an A plus and a B trade is huge, because your A plus trades might only come around a couple of times a quarter. But if we don't know that this is our A plus trade, we're just going to treat it like a regular day in the park, and we'll just place 1% on that. And this is the time when we can really make the year's money, the month's money. We want to be pushing those much harder than a regular, just bread and butter B trade setup, because the expected value is higher. So you can see the expected value is 3.2 on the A++. Again, this is just a small data set, but you can see the expected value for each, and the higher the expected value, the more you want to be risking on that position. So if you haven't already done it, definitely calculate your expected value. This one here, then, this is specific to this particular setup. So on this setup, it's a very mechanical setup, and what we were trying to figure out is, okay, what do we want to measure on this? Because basically, for context, this guy's setup, he has a fixed take profit and a fixed stop loss. Stop loss goes above or at the extreme of the supply and demand zone, and he always targets at 3.2 to 1. So we don't need to measure anything there because it's fixed. So what we could measure is, okay, he wants a reaction before price reaches his supply and demand zone. So therefore, for this particular setup, all we want to track based on that is how far away was the reaction? Was it close, medium, or far? And on which time frame was it on? That will then, over time, give us the accurate data that we need to make a decision on which is our A setups, which is our Bs, which is our Cs, etc. TP and stop loss optimizers, I don't need to go through all of these, but again, these are all individual experiments. This is just measuring, okay, which ones of our trades actually end up running on a lot more after take profit. And basically what we can do is then just just look at all the trades that run on +3 or more and think, okay, is there anything in these that I can figure out that there's a pattern? So, okay, how can I identify when price is about to actually run on much more, and then potentially I will leave a runner in, I'll manage that position slightly differently. Stop loss optimizer, we have been through that. Break-even optimizer, again, this automatically calculates the break-even for each individual setup. If this is over 0, the break-even rule adds to the system. If it's below 0, the break-even rule actually harms the system. So again, this is a formula that I've built in, but you can just figure out a way to track that, because we want to know if we have a break-even in place. We want to know, is it actually hurting us or is it benefiting us? There's no point just having a break-even rule or thinking, do I want one or do I not? The data should tell us. The data is how we should answer absolutely everything. So definitely track, is your break-even helping you or hurting you? And here's just some extra stuff, just again, which session time, day of the week, etc., that we are performing best on. That's just generic stuff that everyone, we should know and we should be tracking. It's very easy to track. And potentially in 100 trades time, we will have some data that will actually give us some worthwhile stuff that we can make decisions based on. So then this is extremely important. So when it comes to data, we want to identify what is the difference between a rule and a confluence. So for this particular explanation, I have very clearly differentiated the definition between a rule and a confluence. A rule is something that has to be there when we take a trade. It has to be there. Like this is our setup. We take a trade when the rules are there. A confluence, like we mentioned, can be there. So rules has to be there. Confluences can be there. And the way that it works is, over time, a confluence, if it is constantly showing that this is the highest probability confluence, we can then make a decision. Do we want to make this confluence part of the rules? And oftentimes what I'll do is I'll look at my highest performing confluences, and then I will take a confluence, make it a rule, and maybe remove one of my rules and put it into a confluence. So for instance, to give some context on it or an example, The most recent one was where I was tracking the data on my lower time frame entry. So initially I had that part of the rules was that the trade had to come at the beginning of a 15-minute candle or at the 15-minute candle changeover. So if I was to take a trade, it would have to be, let's say, in the last from minute 13 to 15 of the 15-minute candle or minutes 1 to 2. So it had to happen on that changeover. Then what I found was, okay, this double break of structure on the lower time frames is actually got a higher probability than this. So what I did was I switched that and I moved that the trade happening at the beginning of the 15-minute candle was now a confluence, which I'll still continue to track. If it does happen, if the entry does come at that time, it's more higher probability, but it doesn't have to be there. What we now have to have is a double break of structure on the lower time frames. So you can see how I used the data, the numbers, the probability was higher, the win rate was higher if we waited for a double break of structure compared to if we just entered, if we broke structure at the beginning of the new 15-minute candle. That's one anecdotal example, but that is how we utilize it. Like, this is literally answering maths questions using maths. And I know that improves the win rate because the numbers say it. So this is what we just covered. I don't think we need to jump into that again. Yeah, how our confidence become our rules over time. Yeah, that's pretty clear, I think. So then, expected value. So we briefly touched on it, but we really want to nail this. This is super, super, super important. Like you see here, this is our North Star. So this is the calculation. This is the formula. If you want to screenshot it, win rate times average win minus loss rate times average loss. As we know, if it is above 0, this system is profitable. If it's below 0, it is not. We have to make a change. So here is some analysis that I've just done for a client on their system. And you can see here, this is their expected value. It's 1.52. Brilliant. Super, super, super strong. Right now, without even making any changes, this system is profitable over the long run. On average, you can expect to gain 1.52% from this system. So then what do we do from that? One, we have to know it. And then we want to go in and just think of, okay, how can we actually build on that? How can we utilize that and make more money? So always want to then get defined on what is the difference between the A++, A, B, C, and then apply risk dynamically. On the A++s, get uncomfortably big. On the Ds, don't even take them. And then A, B, C, just risk accordingly. So crucial. If you haven't started this already, I would highly suggest that you start thinking about, okay, if I have one setup, what is the best version of that? What's the worst version? And then eventually, the more detailed you get, you'll be able to grade them via that. So customize data options. So we've been through an example of this. These are the particular experiments that we want to run. Data feedback. This is just what I advise to do. And then here is a GPT prompt. So you don't need to utilize this one, but basically we want to be able to take our data, get the numbers, and utilize AI to actually help us in some way, shape, or form, because data, especially if your mind doesn't work, it doesn't, you don't think in data. I don't really know how to explain it. Like, if you haven't made that connection to, okay, this is how I'll optimize using the numbers, the AI can really, really help you to stay on track with a particular experiment that you're gathering. So you don't need to use this one, but just think of something that you can utilize. Export your data as a CSV file, upload it to GPT, and you're actually able to ask it particular questions. Is my system profitable? Can you see any holes in it? Do you have any advice on what I should do? Which one experiment are we currently running? And what you can do is so let's say every month, at the end of the month, export the data and ask it to do a comparison between this one and that one. Where is something that I might be missing, etc. So, and then optimizing using the data. So So most of this, let's look at this. This is, so when it comes to optimizing, we've already been through some examples of running particular experiments. What we want to have is the generic stuff. So just the basic stuff here. So these are all filtered. These are all formulas that automatically spit out the win rate, hour we took, direction, and this is just for one of my particular setups. So we can see over time, we know this setup, well, in the last 12 months, has generated 44% net profit. So it accumulates all the wins, all the losses, and we know overall this system is profitable. We can see the expected value for this is 1.1. So this setup, on average, will return me 1.1% per trade. You can actually see it's very different to, like, none of these are really 1.1. You know what I mean? Like, I'll lose 1%, but then make 3.2%, make 2.7%, lose 1%, etc. But overall, the expected value is 1.1. So I know this system is profitable now. I don't need to worry if I'm taking this setup over and over again. Am I going to be profitable at the end of the month? I know it is because the data tells me that. So we want to be able to look and see this. So are we better in Asia, London, New York? And if you're just recording stuff in a spreadsheet, figure out a way that you can actually filter and optimize it, so that you can answer these questions, because they are important. All of this stuff is important. So let's jump back. So yeah, that's the generic stuff. It's just the general stuff, and then, like we covered, we want to have then set up specific stuff. So particular stuff that we're testing for each individual setup. And that's this thing here. This is one of the biggest reasons why trading is not subjective, or profitable trading isn't subjective. The last section then is actually optimizing using the data. So we've touched on this, but this is the process that I go through with the guys that I work with. It's record the data, get the generic stuff. So we want to just know the overall general stuff, punch in all the data here, get the numbers, and then once we have the numbers, then we can start to make specific experiments, run them, and optimize based on that. So it's not a guessing game. This is what's broken. Let's test this. See, come back a week later, 2 weeks later. Did the number go up or down? Make one more change, and that's the important part. It's the one change. We have to, or we can only change one thing at a time. So what we do is, I'll give you a little TLDR. When I'm working with someone, the process looks like this. And this is the process that you can follow. It's have your rules, take trades, record the data. From that, calculate your expected value. Once you have your expected value, this is then your baseline. So what you want to do then is make one change and retake trades, redo the experiment, gather more data with just changing that one thing, and then recalculate the expected value. If the expected value goes up, that was a good change. That actually added profit to the system. If it went down, remove that. That was a negative thing. You don't want to actually include that system. You don't want to include that in your system. So then you can just keep repeating that process, testing one thing at a time, and your system is just gradually getting more and more profitable. And it's like trading is just, it's so much less complicated when you're just using the data to answer the questions. Cool. So that was data. Next thing I want to cover then is the process. So this is crucial. So I've learned so much of this from SMB Capital. Absolutely golden books. Highly advise reading One Good Trade and the Playbook. Absolute game changers. So these are the different elements that we want to make sure that we're taking care of on a weekly, daily, monthly, quarterly basis. So starting off with the playbook. So Mike Bellafiore says a trader's job is to build their playbook. And our playbook is literally what enables us to categorize our setups based on A to D. enables us to grade them. So if we don't have a playbook, and what a playbook is for context, it's literally a catalog of our best trade setups. So we have our quantitative data, which is our numbers, and then we want our qualitative data, which is our playbook. This is training the eye to actually see our particular setup, which market conditions, price behaviors, etc., are there present on all of our A+ setups. So what I outline and what you can outline on your playbook is asking the question, who is trapped? So who in this move is underwater because we're now going to eat into them fast and hard? What geometry set this up? So was it a large consolidation? Was it a big, huge pump? What did price look like before that? And then where should I have gotten in and out most optimally? So in this, we want to actually answer, this is after the fact trading. This is like everyone says, oh, you're just looking at that after the fact. We have to do after the fact at some point if we're ever to be able to take that in live time. So we have to go in and actually cherry pick particular trades and then just think, okay, if I was trading this perfectly on the best day, this is where I would get in and this is where I would get out. And you keep recording that over and over again till eventually you've seen it so many times when it does appear in lifetime, you actually do get in and out at those levels. So what I would say to the guys is we want at least 10 categorized setups before we're taking any live trades, ideally 20, but like 10 is the fucking bare minimum. We want to have 10 minimum examples of the same thing happening over and over and over again. They should all look very similar. And then from there, what we can do, this is the scaling flywheel, as I call it, we can then start to build on that. So the way that it works is if you want to add a new setup to your arsenal, initially you're going to have to do the screenshot. So this is phase one. You want to go through, just find a move in the market and then just take screenshots and just put them somewhere. So start building up 10, 15 examples where price looks relatively the same. From there, we want to actually outline top 10%, bottom 10%, and which of these are the best ones, like the ones where, okay, cool, this is a proper solid move. And from there, we can actually take that and make playbook entries based on that. So take the screenshots and then from there, go in and do detailed playbook examples. And with the playbook, it is much better to do a lot of deep analysis as opposed to just gather a lot of screenshots. Like it really is quality over quantity. Like we want to dissect the fuck out of it, just turn it inside out and figure out everything about this. What was price doing beforehand? How did yesterday's close look? What was the previous session setting up? Anything that we can do, like looking left before the move happened, to in real time be able to tell, okay, this setup is setting up. So when adding a new setup, screenshots from the best ones, do a detailed playbook entry, and then from there we can then start to reverse engineer the rules. So we can look at these, let's say 10 playbook examples and think, okay, if I was to enter this, what rules would I have to put in place? Maybe I have to wait for price to pump up 3 levels, go sideways, liquidate the top, and then have a break of structure. Just looking at the setups and thinking, okay, how do I put some boundaries around this? And that would be able to give us our rules. Once we have our rules, we can then start back testing and forward testing, gathering the first data on that position. Once we have the initial data set, minimum 20 entries, we can then calculate the expected value. So remember the expected value from before, calculate that, then change one thing at a time, change it, gather the data, and then recalculate the expected value. And guys, that's it. Like that's literally how we improve. It can be that easy. So next thing then is the daily report card. This is crucial, like so important. It is, we can show up to a trading day, take some trades, feel like we've learned something, but then a month later come back and do the exact same mistake. And that is very, very, very common. I did that for years and years. What stopped me doing that was the daily report card. And this is super critical. Like we have to sit down and think, okay, what actually went good today, what went bad today, and you can use these as some pointers for it. So having a pre-market game plan is crucial. Like we should fail to plan, plan to fail, plan to fail, fail to plan. We should not be taking a trade unless we have planned that trade. Even if you're a scalper, like have some area that you're waiting for a reaction from. Then review of the trading performance. So have the plan, then review the actual performance at the end of the day. Where's there room for improvement? And which was the best opportunity of the day or the easiest money for the day? So there's a big difference between what is the best fucking biggest mover of the day, something that pumped massively or fucking just dumped, melted, compared to what was some easy money, like just a bread and butter, very consistent. You don't want to fucking bet the house on it, but you know consistently you have positive expectancy on that position. We want to be just nailing those as much as we can. And the process of doing this daily means that over time, over a year, we're going to have gotten at least 50, 100, 200% better because we're just constantly just improving, focusing on every day, making a plan, evaluating after that. Just this is the work. You know what I mean? And it's the whole thing of, as Michael Bellafiore says, how good do you want to get? Like, do you want to become your best trader? Do you want to actually scale to the max? If you do, these are the things that are required. These are what separate the people who stagnate, stay in the same position for a year, compared to someone who's constantly improving, pushing, which in 12 months' time, they can have 10x their potential position size. So then next one's very generic. We have to be doing a weekly review. We have to just be taking time at the end of the week to stop. This is the same as a daily report card. The weekly review, it's the same principle. Want to go in, again, super high leverage task for traders, complete this without fail. And this is where we'll combine the qualitative data and quantitative data. So we want to be going in and thinking, okay, is there anything that I kept doing this week that I really want to focus on fixing next week? And the way that I do this, it's more so we want to be just focusing on 1 to 2 things max. We don't want to come into the week and think, okay, I've got these 5 things that I want to improve, because again, jack of all trades, master of none, bird in the hand is worth 2 in the bush. If we're trying to fix 5 things at once, the chances are at least 3 of them aren't going to get done. And the chances are fucking none of them will, because we're just spreading our energy and our focus so thin. So I'd pick one thing each week. And if you can actually fix one broken thing in your trading per week, like you're laughing. But it requires that particular focus. We can forecast. This is the same again as pre-market game plan, but for the week. So we want to go into the week having an idea of what we're anticipating, which particular markets. Is there any area of interest on the dollar that we're looking at, or the indexes, or is there some particular, are we at a decision point? How was the previous weekly candle closure? Are we waiting for a price to come up, create a wick, and then take the expansion? Where are we in terms of the 3-month cycle? Are we near the month end? Are we near a previous month high or low? All of these things we want to know before we go into the week, because when it comes to actual decision making time, when it comes to the live markets, we want to have that plan so that when price reaches that area, we've already said, okay, if this, then that. If price does this, I will do that. And it just, again, it maintains us in a more parasympathetic, I can never say this word, parasympathetic state, because we already have the plan and we're literally just waiting for price to come to us. Same principle then on a Wednesday, do the exact same thing, just a little reset, middle of the week, recuperate, think, okay, what went well, what didn't go well, and then have a plan going into Friday. So finish that week strong. And then here, we kind of touched upon this a little bit earlier, but our rate of learning determines our ability to make progress, or how fast we make the progress. Some of the guys I work with, they've been trading for initially just 3 months, now 6 months, but the rate of progress that some people have is so different to other people. And it's because of how much reps they're putting in. How detailed are you going on your daily report card? How accurate is your data? How much playbook examples do you actually have? Like for instance, when I wrote this, I had gathered 10 playbook entries that day. And that just means then that on that day, I have gained so much confidence on that setup. And so it was a new setup. That means that I have the ability to then start gathering data on that. And then all of a sudden, within 3 to 4 days' time, we have a completely potential new setup that we're taking, which is now going to put money in our pocket. Compared to someone who hasn't done that, they're still showing up every day, taking trades, but their rate of progress is completely different. So it's all down to us. Like it literally, the buck stops with us. It's not how many years or months we've been in the game. It's how much are we actually progressing? Are we focusing on the important stuff? And this is the important stuff. Nailing these. Again, yeah, the contrast between someone gathering playbook entries and then someone else just watching a YouTube video. Like this is specific focused study. This is just fucking general thing, just another concept, just filling our head with air. Which employee stocks, we're going to cover that now. Very good exercise I do with the guys, but a little bit long. We can see there's a lot of things we actually have to stay on top of as a trader. And the fact of the matter is, if we lack on any one of these, we know that our results are going to also follow. So what I would advise is systemizing it in some shape or form. So for me, I've created my lab. So I've got my templates for everything. So Monday, different template for this, for the middle of the week, for the end of the week. And all the guys use this to stay on top of the stuff. And again, it just makes everything easier having things systemized. We can just look at, so at the end of the week, every week, this will just come up. What's something I learned this week that makes a small improvement to my trading? What market conditions were my edge strongest in this week, weakest, etc. And then over time, we keep doing this and we keep building up our arsenal and our knowledge base as to when our best time to trade is. Positive focus, negative focus. What progress did we make? And is there any valid trade you'd miss this week? Very important doing that. Every week we want to be going in, and you can do it in your daily report card as well, going in and seeing, okay, what was the opportunity that I didn't take that I could have taken? And honestly, it is much better to sit there for 3 hours for the whole session, not take a trade, and then do a very detailed playbook example of some trade you could have taken, then take 2-3 trades and fucking just not revise anything, not study anything. Because we don't actually learn anything. We don't learn from the act of taking a trade. We learn from taking it and then reviewing it, or straight up just reviewing it. We don't have to actually take a trade to learn something. And then just a little performance review just to stay on top of, okay, overall, how was our day? How was your psychology, trade management, etc.? And just do this little exercise. It really does keep it top of mind. It's like, fuck yeah, genuinely, I really wasn't prepared today. So then you fix it for the next day. Yeah, and then same with the month, everything. So what trends we noticed this month? So this is more of a higher level thing that we want to complete at the end of each month. What was your biggest win, loss, or lesson? Biggest mistake you made? Is there any habits outside of trading that hurt your performance? So we want to be noticing, okay, maybe if you go out drinking, or we stay up all night fucking watching Netflix, or we eat before bed, stuff like that. And then did your routine support your goals? So again, similar thing, pre-session rituals, reviews, etc. And then which strategy or process needs refining next month. So this is deciding on, okay, what do we actually want to improve now? Because we don't have a specific plan of what we want to achieve in the month. We'll just fucking, again, just meander. And then priority, and then what is one constraint you will remove. So something we've noticed is actually hindering us. So yeah, one thing I noticed recently was that eating before bed. So now literally trying to eat 6 p.m. latest, because it makes such a difference when you wake up. Cool. So I could jump into a little bit of the playbook as well. Actually, that would be useful just to show you guys what my playbook looks like. So you have the difference between the A plus, A, and then bread and butter setups. So we want to know what is those different categories, and then you just click on them, and we can see the detail that we go into. So what was the optimal trade management for this trade? So the optimal trade management we would enter after the coil, and then the TP would be the pump origin. So going in and actually dissecting it. So the more detail we can do in this, the better. So this is where we would enter once we coil shift and then TP the pump. How could I, or where could I have added size responsibly? This is such an important question. If we answer this every time we take a playbook entry, we will know the exact market conditions, where our edge is strongest and where we can actually load up. So here, this is typical of the setup here. Once we've rolled over, this move is the high of the month. We've already confirmed the move. We've pumped up above, gone sideways at the high of the month, broken structure before the session, pumped back up and rolled over. So this is a scalable trade setup. And then where we go to break even here, and then just doing that over and over again. So what did yesterday do? So this is now, these two sections here are where I look left. So what did price do before this that could have led me to anticipate this position? Super, super, super important. So we always want to be looking left. What did price do before the move? And then what geometry did the previous session set up? So again, these are both different ways of asking the same thing. What did price do before the fact? So in this example, we had a false break and then a coil. In our best setups, we will pump out of the closing breakouts high and fail, proceeding to coil into the EMAs. Lovely. And then these are all just different examples of similar breakdowns, just the A++ setups. And then when price shows up in these instances, I know I can push the boat, push my risk a little bit harder. Lovely. So that covers process. That is everything that we need to do to stay on top of our trading and to actually scale it. So our playbook, report card, reviews, forecasts, and then we know all of that will combine into our rate of learning. Sweet. Next section then, mindset. And mindset is a bit of a funny one. So I have some differing views on mindset. So in terms of mindset, I believe that a huge part of trading psychology, can be fixed literally just with proper data and a steady income, genuinely. Because where does all of the psychological issues come from? It's being stressed, needing to make the money. It's not knowing whether your setup is going to show up again. You know what I mean? Like when you have a data set there, like we'd say trading psychology is like, if you have poor trading psychology, it means you got low confidence. Hormozy defines confidence is that undeniable stack of proof. That's what gives you the confidence. S&B talk about this as well. They say, like, we don't want confident traders. We want them to just genuinely know what their setup is inside out. When you know your numbers, that gives you confidence because you know objectively what's going on inside your trading. If you don't, of course you're going to have psychological issues. Like, we don't need to listen to fucking Mark Douglas to figure out or to gain this confidence. If we know objectively what our expected value is, how many times we can expect our setup to present in a month, and what our win rate is based on all of that stuff. So that's where the confidence comes from. Like, I'm not scared on a given month because I know that my systems play out. So if you are someone who considers themselves having poor psychology, I would say just get a job. If you already have a job, you need to sort your data out. Cool. So broke these down now. This is everything that we go through as traders, let's say, when we think we have bad psychology. And there's literally, it's just cause and effect. There is a reason that we're feeling a certain way. So if we're feeling FOMO, these are the reason that we are FOMOing. And if we fix these, we will no longer be FOMOing. It's simple as. So we are FOMOing because we either don't have the data that tells us how many times we can expect to see the setup. So then without knowing what the cadence is, how are we supposed to trust that there's going to be another one around the corner? There's going to be another one tomorrow, another one next week. If we don't know that, we don't have a number that tells us that, then of course we're always going to think, oh, well, shit, I've missed this one now, so I've got a poor entry, but I want to participate anyways. So knowing the cadence would help massively, massively. Then another reason is we haven't defined our playbook enough. So we don't know the difference between just a fucking move in the market, an injection of liquidity, and our actual setup. So that will cause us to FOMO into trades when we see movement. And oftentimes that big, fast injection of liquidity is actually just a stop hunt. So you get lulled into that kind of trance-like state, the market just moving super slow, and all of a sudden, boom, big volume increase. And oftentimes when that happens, when the market slows down and speeds up rapidly, that is often the trap move. But without knowing what our setup looks like, we can get sucked into that very, very easily. Then FOMOing, if you need to pay rent, you got bills to pay, you literally need this money, you haven't got a job, that is, that is going to cause you to FOMO into trades because you have to make the money. You don't have the grace to wait for the ideal setup in your head, even though that's actually taking the long way around. Like the fastest way to get somewhere is a slow way. The fastest way to make money in trading is to actually be patient and not take all those other shit setups. Then non-regulated nervous system. So this is super clear. Like genuinely, when we're in the markets, we're flung into a state where it's super high stress. Pupils get smaller. We're in this fight or flight mode. And if we do not have a regulated nervous system, we're going to be swayed more and more by the movements of the market. Yes, we're going to be put into that stress state, but how much depends on how regulated our nervous system is. So if we do stuff like make sure we hit the gym regularly, hot and cold therapy, breath work, all of these things that actually do regulate our nervous system, it means that we can hold stronger when the waves of the emotions and everything are super high. When trades fucking pulling back against us, and the market's moving really quickly. Trying to process data in those times, if we're in a super sympathetic state, means we're just gonna be making bad decisions, acting out of fear, and just FOMOing into positions. Then the ego. This is a big one. So the ego will want to be right always. Like that's the ego is just seeking approval for keeping reality the way that it sees it, and then also wanting to be right. So the way that translates is when we're in the markets and we're watching a position and we're like, okay, cool, this looks like from my experience, I can see this is likely going to go down. It's not my setup, but I can tell this is going to go down. Like this has got a higher probability of going down than up. And then price does go down. And you're like, fuck's sake, I fucking knew it was going to go down. Da, 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 da. And then we start telling ourselves this and like getting pissed off that we missed it. And next time we need to actually take it. When in reality, no, we don't need to take it. It's not our setup. It's actually the good thing, the right thing to do is to, even if we can tell, I don't want to say no, even though we can see the market has got a high probability of falling, if it's not our setup, we should not be participating. And we're actually right. Even if our thesis was right, we are wrong if we participate. If we hit that trade because we can tell it's going down, but it's not our setup, that's a fail. That is a loss, regardless of P&L. So the ego, be careful with that one. Accept the fact and just get used to the fact that we're not meant to catch every move. And if we are trying to catch every move, we will end up with either fucking giving a shitload of profits back or just genuinely not even being profitable. So I say a restricted trader is a profitable trader, as you say on Titans of Tomorrow. And the last one then, no fixed minimum risk reward. So if we have a fixed minimum risk reward, whether it's 1.1 to 2.5, even 1 to 2, 1 to 3, anything, having that minimum will mean that if price moves without us and we have to place our stop loss at a certain area, it's no longer worth it for us, or it's no longer possible for us to enter the trade because our rules dictate that we have to have a fixed minimum risk reward. Without that, price can fucking go halfway to our TP and we still like the look of it and it's moving quickly and we get another hourly closure or something and then we just want to participate, when in reality, no. Like waiting for price to come back and having that minimum risk reward is what's going to allow our winners to pay for our losers. That's the most important thing in trading. Our winners have to pay for our losers. If we're FOMOing into position that's halfway fucking to TP, or we wanted to get in at this level here and now all of a sudden price is 10 pips away, that 10 pips massively changes our position size and our risk reward. So installing something like a minimum risk reward will really, really, really help you stop FOMOing. And fear, again, these are all overlapping. Like there's only a couple of pillars that we have to fix. Nervous system, psychology, money coming in, proper process, data. Like it sounds like a lot, but again, this is a job where we can earn unlimited amount of money. There is no ceiling on this, but there is requirements. Like there is a admission cost. We have to do certain things. And if we do those, then it's simple. Then trading becomes objective. Like if we do all of those things, we can withdraw, we can scale up our trading account, and we can genuinely just work a couple of hours a day. And I don't even like that frame because it's the whole thing of how good do you want to get. A couple of hours trading and then a couple of hours improving the trader. But anyways, fear will be caused, like if you're hesitating before you jump in the position, you're sitting there, you freeze, it's going to be because of these things. So lack of prep. So you either don't have like an overall preparation in terms of you don't actually know your setup, or you didn't do your daily report card for that day. You didn't do your pre-market game plan. You didn't mark out your areas you were looking for a reaction from. Lack of preparation. And then this one's obvious. Any like lack of sleep. If you're hungover, if you're sick, we should either not be trading, or if we do want to take a trade, just lower the size massively. You know, how many times I've sat there and you have like this thought, it's like, today is one of those days where I just don't feel right. You know what I mean? Like something feels off. Even if I've gotten up and I've hit the gym, I come down and I sit in the seat, I'm like, shit, today just isn't the one. And how many times I got burned by just trading normal size on those days, when in reality it was like my nervous system was not regulated on that day. So therefore I cannot make decisions with my usual size. So now lower the size when we get that feeling where we're just a little bit off, a little bit sick, a little bit tired, will save us massively, because on those days we can really do some damage. Like you fucking take a couple of heavy losses on one of those days and you just feel like, yeah, pure shite. Again, it's very similar, ties in with the nervous system. So if we are not trading in the parasympathetic, if we're sat there in a sympathetic state, meaning we're in that fight or flight state, we're not processing the live markets at all properly, like our decision making is just completely off, lower the risk. Like we shouldn't be trading in those states. Limiting beliefs, then, this is another thing which causes us to hesitate and not pull the trigger. And this is a big one that you will really, really, really have to work on. It is getting used to the fact that, oh my God, I can actually see this move happening on the chart. I can see it playing out. This is one of my playbook examples. And now I can see the exact same market conditions here. I can hit this trade, hold it to my take profit, and I can make thousands of dollars. And that realization, some part of us, because it's been instilled into us that money is hard to make, whether it's from our friends or family, society, money is hard to make. You likely have that issue, or that belief. You're holding on to that belief. Unless we can get rid of that, we'll find ourselves constantly exiting positions halfway towards take profit. All of this stuff, closing trades early, hesitating before we get in, genuine just fear, because we do not believe at our core that it's possible to be that easy to make that money. Why they say trading is the hardest way to make easy money. But really, 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 we want to nail that, excavate that, and get rid of it, because that will continue to bite us. And then trauma. So straight up, trading traumatizes us. Like there's a whole hero's arc. Like you start off, everything's going great, and then you fucking dip down, realize this is fogged, and then you're in the hope of optimism. But all of that, all those losses over and over again, price goes fucking 3 points from your take profit and then reverses in its stop loss, or price just fucking goes up a little bit and then fucking 3 stop losses in a row. All of this stuff, it's emotionally damaging us, and it hurts. And over time, when it keeps happening, you have a plan and then you fucking break your rules. All of this stuff builds up and it traumatizes us. And again, it's not like fucking like your parents died in a car crash or something like that kind of trauma. But trauma, the way that I define it, is anything that leaves a lasting impact. So when the new data comes in, you will act differently. I explained that really badly. Is anything that has a lasting change on us. So I call that trauma. So if we have previous losses and they affect how we actually show up in the future, we are traumatized because our previous losses are causing us to hesitate now. So we need to, first of all, accept that we have that, do stuff like, again, just the usual physiological stuff, our breath work, our fucking working out, meditations, excavations, journaling, but genuinely just going deep into our psyche, figuring out what is there, and then operation, get it out, move it, replace that with a more empowering belief. Cool. So that's FOMO and fear, the two main ones. And then closing trades early, very similar. This will occur from a poor playbook. So if our playbook isn't clear, if we don't know what we can expect to, like, what's the expected value for this? What is the area that I should be taking profit on? Then we're way more likely to actually close a position early. Don't have the data. So again, do not have the expected value. We don't know what is a typical or percentage that we can expect from this position. So this is super important, because imagine that we're in a position and this is actually the high of the month. So price has gone up week 1, week 2, week 3, week 4. We're at the high of the month. We've broken out, consolidated underneath the high, and then just broken down. That trade has a much higher expected value than price pumping out of yesterday's high on a Monday and then breaking down. Similar setup. We've got an area, we've broken out, consolidated, and then broken down. The monthly high will have a much higher expected value than the weekly high. Therefore, we should be sizing and holding according to that. If we don't know what the expected value is, we will just treat both of those the exact same, and maybe this trade could have been a 6, 7, 8 or trade, and we just fucking close it at 3 or as per. So very, very important to know the difference between each of those trades, so we're not closing early. And then if we are also closing trades early, big thing it can be used or down to is not having mechanical exit rules. So having too much subjectivity and then closing without a, as they say, R2C, so a reason to close. So the more mechanical our rules are, it means the less data we have to process, the less decisions we have to make, and generally overall the better our trading will be. So the trader is often the issue. So in trading, it's either is it your system or is it you? And if the system's okay, then it's obviously you. And oftentimes it is the trader itself, because any strategy, it's like it'll take a couple of months to learn it, and then after that, it's all on us. And the reason that people fail is because of themselves. So if we can remove ourselves from having to make as little decisions as possible, that will help our results, especially in the beginning. As you get more experience, you can then add in more subjectivity, more experience, more nuance, etc. But for sure, if you are struggling right now, or you're struggling to push up to reach the next level, just make it more mechanical, remove subjectivity. Again, then nervous system. So we're always in fight or flight, perceiving pullbacks as attacks. So just train that nervous system. Visualizations, again, visualizations aren't for the nervous system, but doing all of those exercises, those rituals, breath work, just fucking making sure that and when I say breath work, most importantly, it's the breath holds. So we're doing the hyperventilating and then breathing out completely and then holding the breath. So leaving our body with no oxygen inside. This is the most stressful thing for our body. This is putting our body at war. It's putting our body into that state where it feels like it's being attacked. Piece of popcorn in my throat. This is the exact same as the markets. When price is pulling back towards us, this is attack mode. We are in danger right now. Our body is perceiving the breath hold the exact same as that. So if we want to control how we react, do the breath hold, and in that time, just remind yourself, I'm safe, I'm okay, everything is all right, I'm in control. And if we just keep doing that in that state, when it comes to the markets, we're safe, we're calm, we're in control, we're not stressed out, we're not making bad decisions, we're not closing trades early, etc. And then last thing, this can be a big issue, very big issue, previous trade bias. So I call it previous trade bias. It's literally just making a decision based on the previous trades. So, oh, well, last week NFP just blew off straight away. So maybe this week this month it's going to do the same thing. And you get in and it just fucking whipsaws you. Or last week this only went down to the low of the day and then reversed completely. And then it just ends up melting to the low of the week. Like, they only have a couple of plays. The market makers, they only have a set amount of ways they can actually move price. And typically they don't move it the same way twice in a row. So if we're using previous trade bias and we're thinking, okay, what happened last time? And let me not make that mistake again. Chances are they're going to do the opposite and they're going to do the other one. And then you're just going to be left with your dick in your hands because they have maybe they only have 3 or 4 variations, but they played that one last time. We think, okay, because that happened last time, let me do this time. And yeah, just a recipe for disaster. So use the data to make decisions, not the previous trades. And then poor late entries, very, very similar to the FOMO one, poor playbook, lack of funds, poor planning, or trading on a too lower time frame. So we haven't talked about this yet. If you are struggling, if something hasn't clicked yet, I would 100% say up the time frame. Even if you're on the 1 minute, go to the 5 minute or 15-minute, even better, or hourly, even better. The way that I became profitable was switching to the hourly. So I used to trade the 1 minute for years, and I could call good trades, but not consistently. And eventually I was like, you know what, fuck it, I've had enough of this. And now I don't just enter on hourly closures now. I've now dropped it back down again. But to build up the muscle, to get up that confidence, that self-belief, you know what, I fucking can do this. Going up in the time frames just helps so much because, again, we're in that stressed state. We have to process a lot of data, price moving very quickly on the 1 minute. If we do not have the self-confidence and that we have proven to ourselves that we can do this, we're just going to be making so much more mistakes, and we're exposing ourselves to so much more variables on those lower time frames. So up the time frame, and I promise you it will definitely help. So these are then some of the stuff I go through with all the guys. I don't need to go through all these. We can just look at some of them. So this was really good. So all of these are for reprogramming our subconscious and for us to step into the trader that is the person that makes those withdrawals, that is the person who has their record month over and over again, because we will never outtrade our own self-image. And it's the whole thing of like, everyone says, oh yeah, like manifesting, or even the word self-image, or all of this stuff. It's like, okay, but how? Like, how do I do that? You know what I mean? It's like, okay, yeah, don't think negative thoughts, but how do we actually change our self-image? How do we reprogram our subconscious? And when it comes to the subconscious, it is, what I will say, it's easier to change fast and slow. Like, you can instantaneously upgrade your subconscious, you know, the whole word like paradigm shift, but like you can genuinely, in a session or in a sit down, you can completely change your beliefs. The way to do it is to make sure that we get in a slow brainwave state. So we want to slow our brainwaves down. When we're in that state, we're more susceptible to programming and to actually, it's literally like our subconscious is listening in those times. So anything that we say when we're in that slow brainwave state, our subconscious hears more. So we increase the chances that we can actually change that belief. So the best times to do this are first thing in the morning, last thing at night, because we wake up and we're in that slow brainwave state, or just put ourselves into a meditation. That will also slow the brainwaves down. So what we can do is specifically pick what we want to imprint, and these are all different exercises to do that. But choose what we want to imprint, and then through repetition, and also through those large impact sessions where it's like, okay, this is a session where I'm going to rewire something. So the RAS template, this is what the guys use to reprogram their subconscious. So this is just one of the exercises that we use. It's basically setting a series of alarms throughout the day to, at different times, for the alarm goes off and it gives us a prompt, and we actually think, okay, what are we thinking of right now? So initially it's excavation. So we want to find out, what are we thinking of? So what are you thinking of right now? Just repeatedly asking ourselves that and taking note of it. And we want to see, okay, how are we feeling throughout the day? And then this one is then for intentionally imprinting certain things. So a prompt to say, what was the best part of my morning? And we'll actually then go in and think, okay, what do I have to be grateful for in this? Why am I a profitable trader? And having someone ask us that, or ourselves ask us that, well, okay, when we have to actually logically answer it, it's like, I'm profitable because I have a setup that has positive expectancy. I show up on time, prepared. I take trades, I follow my plan. Afterwards, I review it and I record all my data. It's like, okay, that makes sense. So then when we're sitting in that trade and our subconscious is telling us, oh no, we cannot sit there simply push a button and make 5 grand, then we're like, okay, you know what? I do all those actions. So therefore, I actually do deserve this. I've done what's required. What's the best part of your day? Gratitude. Again, gratitude is the receivership frequency. So we just want to be putting ourselves in that state as much as possible. Why am I so strong psychologically? And again, just answering those questions. Okay, I'm strong psychologically because I meditate 70% of the days. I do not watch the news. I'm constantly feeding my mind with positive stuff. I have my playbook, which I sit there and I study and I review. So my eyes are trained to notice my setup. Therefore, I don't get swayed by the pullbacks of the market. I know my setup's expected value. Therefore, I'm not worried about any particular loss on a given day. All of these things, you're like, okay, just drilling it in. Like some people are more emotional, other people more logical. Me, I'm very high. Excuse me. I have to know why something works. Otherwise, it just goes over my head. Like I could have all the information or like have all of the steps to do, let's say, but if I don't know how or why it works, then for me it just has a very little impact on me. Whereas my mom, she's completely different. Like she doesn't need to know why something is the way it is. She's like, okay, just tell me what to do, and if I can just do it. So this is really good for people who are similar to me, high in needing that logic. Cool. So that's just one exercise that we can do. Like all of these tools here, they're all for programming the subconscious because, again, like we said, we will never. It's impossible to outtrade what our own self-image is. Therefore, we have to do these exercises to actually upgrade our self-image. 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 Cool. So paradigm shift then, like we mentioned, a belief can be changed in one sitting. And like we mentioned, it genuinely is easier to change fast than it is slow. Last year, I was of the opinion that we only change through brute force and repetition, repetition, repetition. So a lot of my subconscious stuff was based around that, solely repetition. Now it's more focused on specific, like intentional programming. So with the guys, what we do is we give them a specific, so they do this excavation, they answer all these questions. Those questions are finding out what are their current beliefs. And then we'll give them a personalized audio that is literally putting them in that relaxed state first and then talking them out of those specific ones related to them, those limiting beliefs, etc. And then that, again, done in one sitting can have instantaneous results, and it does. And then we can then supplement that with repetition, etc., shorter ones. But really, it can be changed in one sitting. So if you have those limiting beliefs, for sure, look to meditate, start meditating, getting used to putting yourself in that relaxed state. Because meditation, if you're not used to meditating, you're not going to get the benefits of it when you first start doing it. So if I can start now, I would recommend using the app Medito. So it's free, completely free, Medito. And the best thing about that is you have the streak onto it. So momentum is literally one of the most powerful forces we have just in general in life, in trading as well. But in terms of keeping track of meditation, if we have that streak, just like the carry on thing, it's so much easier to stay because you just don't break the streak. Like genuinely just don't break the streak. And you can do literally 1, 2, 3 minute meditations on there. Start off with that. I would say don't go lower than 3. Just if I can just do 3 minutes, you can do that. And then move it up to 5, 8, 10. Now, typically I'll just put on an 8-minute one most of the time. And I'll do that a couple of times a day. And the streak thing helps massively because, again, you don't want to break the streak. So then, this is very important, conflicting beliefs. So this is one of the crucial, most core things that can be holding you back. And it is having these two conflicting beliefs. Conflicting is in these two cannot coexist at the same time and we actually make money or we actually scale up. So that's holding the belief of wanting to make money and not wanting to lose money. If we hold both of those, it means that how are you supposed to make money? If you want to take a trade, you have to risk, like if you want to make, let's say, 1500 on a position, you have to risk at least 500. Let's say like you're trading at 3 to 1. If you don't want to lose that 500, there's no way that you can make the 1500 because price pulls back and I said maybe 300 pounds of drawdown, you close it because you didn't want to lose the 500. So you're trying not to lose the money, which actually stops you from making the money. So I'm going to jump into Miro now and we'll go through this more. Conflicting goals. So again, the unconscious attempt to pursue two mutually exclusive goals. I want to make money and I must not lose money. It's just a recipe for disaster. These cannot coexist. So uncertainty is a part of trading. There's always going to be that layer of uncertainty there. And making money will require accepting that layer of uncertainty. Avoiding loss is trying to remove that uncertainty. And again, the whole thing and the reason that trading feels stressful a lot of the time is because of the uncertainty. We're up in a position, we don't know if it's going to go to take profit. We enter a trade, we don't know whether this is going to hit stop loss or we're going to actually win this trade. It's always that layer of not being sure of what's going to happen. And uncertainty to our brain, to our ego, to our fucking survival instincts is danger. To our biology, it's a better word. So we are biologically hardwired to reject it. So literally, anytime there was something uncertain back in the day, we would perceive that as danger. So our body perceives that as danger. We don't know what's going to happen. We used to always walk to the stream this way to get our fucking berries, and all of a sudden now we've gone a different path. We don't know if there's a fucking saber-toothed tiger or something here. It's danger. So anytime we're in a trade, we are in danger to our body, genuinely. So oftentimes people would rather know for certain that something is bad than face uncertain outcomes. So we would rather close a trade at a loss rather than sit in that uncertainty for any longer. And you'll definitely have done this multiple times. So what we want to do is bring awareness to that. So we want to know, okay, this is going to feel painful. Like, not try and avoid it. Accept the fact that, okay, this is going to hurt mentally and oftentimes physically as well. So I'm going to flip it to something empowering. So like what I love to do when I'm in the cold shower is literally say to myself, okay, my body's waking up, my cells like this is brilliant. And I'm walking towards the pain as opposed to fucking just squeezing up and tensing and thinking, oh, this is horrible, and wanting to get out of there. That makes it so much worse. Whereas if we own it and we accept it, then it doesn't affect us half as much. And it almost, it feels good to a point. I guess it's probably dopamine and everything firing there, but that frame will work massively. Accept the fact this is going to hurt, and then just do it anyways, let's say. It's a little exercise. So you can think about in the cold shower, just literally do this test. Like, think about how cold is the water, how comfortable this is, wishing it to be warmer. And again, it's the whole thing of desire. Like, desiring things to be different is what causes the current situation to be painful. So being broke isn't inherently a bad thing or a painful thing. Being broke and wishing you weren't broke is a bad thing. I was in South America a couple of years ago with not fucking 2 pennies to rub together, but I didn't care for anything more. And it was completely fine. And then I've been in other situations where I was actually earning money. I actually had some money, but I wished I had more. And it was horrible, like horrible. And it's because we wanted things to be different than they actually were. Therefore, there was like this dissonance between how things were and how we wanted them to be. So if you're in a cold shower and you're wishing it to be warmer, it makes the experience uncomfortable. And then you try to do the experiment, switch it to, this is beautiful, it's waking up my body, I'm building resilience, I'm choosing to be here. And the same situation has an immensely different experience for us. So pain versus suffering. Pain is going to be there, but we do not have to suffer. So again, we can look at losing a trade. Losing a trade, you probably lost a trade before and you weren't even paying attention to it. You placed a trade, you forgot you placed it, hit your stop loss, you came back, looked at it, thought, oh fuck, and then you moved on. That's probably happened to you. At the same time, we've also all been sat in a trade, watching it just creep back and back and back, edging towards our stop loss, and then just wishing that it would actually just come back to break even, wishing we could just come back up and just close this trade at flat. And it's that wishing that like our body is genuinely in pain, like, oh my God, please just come back to break even. And it's completely the same situation. It's the exact same situation, but our experience is completely differently. So pain is going to be there. It's going to hurt to lose money. Like in the first example, it still hurts. Like, oh fuck, I lost the grand there. But I didn't suffer. I didn't sit there and wish that I wasn't going to lose it. I wasn't going to lose it. I wasn't going to lose it. So I would highly recommend becoming aware of that knowing the pain is inevitable, but the suffering is not. The suffering is optional. We do not have to suffer. We are going to feel pain when we're in these in trades, in open trades. But if we want to hold them and we want to scale up our trading, we have to get used to the uncertainty. Recognize that we know that the body is activating the same neural circuits as physical pain, but doing it anyways. Bracing for that and accepting it. Cool. Then what we want to do is systemize it. So this fucking whole thing of these conflicting goals and leading to these horrible emotions. So sorry, I got a little bit lost. Right, there we are. So we were talking about this a little bit earlier, the whole systemization, that the more decisions that we have to make means, one, we're exposing ourselves to potentially more pain. Because in trading, if we decide when we're going to close a trade and price continues to go, it feels like a loss. Like even a win can feel like a loss. Losses feel like losses, wins feel like losses, and we're just in this state of never feeling satisfied. And it's a brutal place to be because, again, if you make money on a trade, if you followed your rules, you should be content with that. Like we deserve to feel all right in this game. Like it's painful enough, but it's a horrible place to be in if we're taking trades. When it comes to the uncertainty, we know it's going to be painful. Ways that we can avoid it is bring the awareness to it and walk towards it, accept it. And the next way is then to systemize it. So as many decisions as we can remove is going to make the trading in general just less painful. So the pain we've all felt before, oh, I could have closed here, I should have held on longer, I shouldn't have got in there. It's all because we have decisions to make. We have subjectivity there. We have discretion. The more discretion we can remove and make our trading more objective, more mechanical, the easier it will be on our psychology and the less painful it will be. So it's like we have a fixed take profit. We are exiting here. No matter what happens, this is our take profit. So if price fucking flies 50 pips past us, we don't care. We hit our take profit. That was a full win. So any trade we open, accept the risk completely. So we're not closing it until stop loss or take profit. If you're struggling, this is something you have to do. You have to do this. You cannot have subjective ways of entering and exiting trades. You just cannot do it in the beginning. Until you've proven yourself and you have a track record, you've made withdrawals, then you can start introducing that and thinking, okay, maybe I'll scale out of this position, or making decisions in live time about when you're going to exit. If you haven't got that track record, don't even try. Just nail something mechanical, build up the reps, build up the confidence, rewire the beliefs, and then you can then move into it. So if you're a scalper, just shut the laptop. Just take the trade and shut the laptop, walk away. Swing trader, you can't necessarily shut your laptop for fucking 4 days. So don't look at the dollar amount. Like this helps massively. Like even if you're a scalper, anybody, if you're trading and you're seeing the numbers fly up and down and you watch it go from 3 grand down to 1,200, you're like, fuck, I just fucking lost 1,800 there. Compared to, okay, we've just made a higher high and now we're putting in a lower low. Like that's the reality of the matter. Whereas if we're looking at the dollar amount, we feel like we've actually lost that money and it completely changes everything. So look to include something like that if your trading is painful. And then in terms of break even, have a mechanical way that you do it. Don't think I'm going to fucking decide when to go to break even on each trade. Cool. And then super simple, but very positive thing is just changing the metric which we evaluate a win on. A win should be, did we follow our plan? If we follow the plan, that is a win. Win, lose, or draw. Like P&L wise, if you lost money, you followed your plan, that is a win. But again, the data requires that. So to believe in that, to believe that a loss is actually a loss, we have to know the data behind it. And we've already been through data. So then I want to touch a little bit on the limiting beliefs. So we've covered them, but this whole belief system, we want to attack it from different levels because, like we've said before, we cannot outtrade our belief system. So we want to upgrade it, and we can utilize like different schools of thought, so psychoanalysis, metaphysics. All of these are agreeing on the same thing. Like we have got Freud talking about early experiences shaping unresolved emotions around fear, and they're actually shaping our behaviors going forward. So most actions are not consciously chosen, but are directed by hidden mental content we're unaware of. Same with Jung talking about the shadow or the unconscious. It's controlling us, the stuff that's unseen. Joe Dispenza then in terms of metaphysics. So most men are running on autopilot. Neville Goddard, to change external outcomes, you must change internal beliefs. So they're all agreeing on the same thing, and we know that we have to do that. So how do we do it? It is easier said than done, but there are, like we covered, a bunch of exercises that I do with the guys. And again, it's between repetition, so doing the initial excavation, finding out what the beliefs are, and then putting measures and steps in place to actually change them, so to replace them with more positive ones. So what you can do, you decide you're profitable and then embody it. So like I've said a million times, profitability, it's not a destination, it's a decision. We decide to be profitable. We believe that we're profitable, and then the profits follow suit. So deciding profitable, it's not going to do much. We have to then follow that up with the action. So doing the actions of a profitable trader will lead to the result, aka profits, aka making money. So decide you're profitable, then embody it. And what we want to do is find our ceiling. So what is our current ceiling? Like maybe our current ceiling, like for me, it was 3.8% in a month. I hit it 3 months in a row. I couldn't get over that ceiling. And I had to just visualize the next trade. Okay, how can I break past that? Then I remember it being $2,000 at one point. Like on an individual trade, every time I got a little bit over 2K, I would close the trade or I would do something to intervene with it. Then it went to 4K, and it went to 7.5K, and now I'm pushing for that 10K, that 5-figure trade. That's my next ceiling, which I'm focusing on pushing and breaking through in one position. So it's always going to be a step function. Like we'll have an area, we'll have a level, and we have to then keep pumping up and breaking through that and accepting the new reality. So what we want to do is identify our biggest winners. Visualize price pushing in our behavior. So literally feel it. Visualize your MT4, seeing that number bigger and bigger. Like honestly, I was sat there last night doing the visualization, just seeing specific numbers, 10,400 just over and over in my head. Like that number was just got stuck there. So I know I'm going to see on my phone soon that 10.4K in a single position because I've already created it. That has already been created in my mind, and I sent positive emotions to it. The emotions are like the fuel that push it out. So we initially have the thought on the different planes, let's say. So you've got don't need to go through them all now, but the different planes of reality, like the mental plane, the etheric plane, the physical plane, we want to accommodate for each of those. So do the work that's required for creating that reality on as many planes as possible, and that will actually speed up the process. Visualize your bank higher than it's ever been. Visualize you withdrawing that amount bigger than your ceiling. So again, with visualization, the most important part is the emotion. So you're sat there, put on a nice tune that you like, that uplifts your emotions, makes you feel good. Sit there, get super, super clear on what it actually is that you want to create. So you can use guided meditations or visualizations, but I would highly, highly recommend doing this repeatedly. So in terms of the belief, let's clarify this. The beliefs can be changed in one sitting. You get that personalized audio program that's going to rewire your subconscious because you're in that relaxed state and it's talking exactly to you. You do a hypnosis, someone hypnotizes you, you can change your beliefs instantaneously. That's why you get those people who smoked for fucking 20 years and they do one session of hypnosis and they quit. So beliefs can be changed immediately, but when it comes to creation, we want to do the repetition. So we want to repeatedly visualize, focus on the same thing over and over again, and then we're bringing that towards us. So again, not just in our thoughts, every cell in our body. Just imagine our whole body lighting up, feeling it. We're literally rewriting rewriting the code in those states. And this is again, I like everything to be mechanical and systemized. This is us systemizing the manifestation. Let's say, like it's not woo woo. It's like we're metaphysically creating that energy where we are creating it in our mind and then we are drawing it towards us. So it's not this woo fucking hippy dippy shit. It's genuine, like it's mechanical. Cool. So let me jump back into Notion now and we will get cracking. Okay, so we've covered the conflicting beliefs and some visualizations. Now, what we just want to touch on this stage here is the repetition. So we're talking about that visualization. Really good to do that over and over and over again. So we talked about the difference between having the sessions where we actually will go deep and rewire it in hypnosis. But then we want to actually back that up over and over again. Because if a belief is changed, if that isn't supported by actions, we can change it all we want. We can hypnotize ourselves, change our beliefs. But if we don't support it with action, eventually it will revert back to the mean. So I use this example here that it's literally like volume in the markets, whereas price can pump to an area, but if that area isn't accepted, buyers don't come in there, it'll just revert back to the mean. So it'll revert back to that area where price once was accepted. So the way we can do that, and the way that I learned this was doing lots of fasting and like intentional programming. I did a 5-day fast and I fully rewired a bunch of beliefs. And then afterwards, I continued living the same. Let's say I was thinking different. My actions for a period straight after it were different, but then I gradually started doing the old actions, reverting back to old habits. So I didn't change the habits after my belief got changed. So therefore, over a while, after 2-3 months, I found myself, even though I completely had changed, reverting back to doing the same actions as before. So now, if we are doing a belief, what we want to do is support that with the actions, because that will maintain that as the new reality, the new median, the new norm, let's say. So covered that, covered repetition. Next then, self-regulation. So this part is huge in terms of traders. Like this is massive. So our body is our biggest confluence, I often say, but only if we actually allow it to be. So most traders' bodies are fucking, it won't tell us anything. And if anything, it can be a reverse signal, let's say. Because if our nervous system isn't regulated properly, what we're processing isn't guidance, let's say. It's just fucking stress. And we're literally it's just our ego and everything, alarm bells ringing, not actually improving our decision making. Contrasted to if we have a regulated nervous system, it can actually be that last bit of confluence that it's not like, okay, I'm going to enter this trade or not enter this trade because of what my body's telling me. I did try that before. Literally just go to the gym, come back, meditate, sit there, wait for the US Open and then just trade based on that. And it did work for a while, but it wasn't systemized, let's say. But that proved to me that, okay, I can trust this thing if it is regulated. If I hadn't gone to the gym and I hadn't meditated just before that, then I would just be sitting there, just watching the market, just fucking literally just guessing. And if we have done that, if we have put our body into that state, it can be the difference between telling us how much we should size up on this position. Which grade is this? Is this going to be a big move? And the body really can, like we just feel it in our gut, as they say. So let's jump back into Miro. So we covered all these ones here, and I want to jump into this one here. So lots of fun stuff here. But this is the high performer's edge. So we want to master our physiology. So as we know, whatever we plant in our subconscious mind and nourish with repetition, important there, and emotion will one day become a reality. So all these exercises here, they will actually regulate the amygdala. So the amygdala is where we process fear. This is our literally decide whether we're in fight or flight. And then if we have greater control over our amygdala, it means we'll have greater control over our decisions, especially in stressful times. So this is the way, basically, what all traders go through in the first few years is just this cycle of having a plan, but then the amygdala fucking hijacks the prefrontal cortex. We're no longer in control. The monkey brain is in control, and we're literally pushing buttons, closing a trade early and thinking, what the fuck happened? Or we enter a trade and just straight away after think, why did I do that? That's because the amygdala will literally hijack and override all logical thinking and just try and keep us alive, basically. So it is a good thing. It has kept us alive all these years, but in terms of trading, it's diabolical. And if we do not do something to fix this, it will continue to do that. You will continue to break your rules unless you strengthen this part of your brain. So the way it looks here, don't need to go into the details. All we need to know is that what we have to do is strengthen our prefrontal cortex, because that is the part that makes it the decisions. So the way we can do that through meditation, super crucial. If you're not meditating, start now. Like we mentioned, use the app Medito. It's like, I would say, one of our biggest points of leverage. Like in terms of habits and daily exercises, as a trader, meditation is up there with I wouldn't say you have to do it, but Jesus Christ, you're leaving so much potential on the table if you're not. So yeah, more we meditate, again, we can lower the response from our amygdala. So when markets are pulling back, high volatility, we actually are more in control, less susceptible to that monkey brain. So then we got, this is good here. So we covered briefly before the rewiring the beliefs and doing it with repetition. The way that we can actually rewire beliefs, it's coming through here. And if this little ogre here, this is representing the barrier in between the conscious and the subconscious. Because like we mentioned before there, we're sat there in price or just watching price, let's say, and then big volatility spikes. We fucking go against our plan, either close a trade early or enter a position that we didn't plan on getting in on. That's one, because the amygdala hijacks the prefrontal cortex. And then also because that is just our ego and our body acting out what it believes reality to be. So it doesn't, if we don't believe that we can actually make, let's say, 4,000 on a given trade, when we're 2,000 up, something happens, like price pulls back, we will close the trade because we don't believe that we can make that 4,000. And there'll always be a reason that we can justify and say, oh yeah, it was because of that, it was because of this. Always a reason in the physical world, but it will always come back to the belief systems. So if we ever want to do that, like we mentioned, we can never out-trade our beliefs. What we have to do is rewire them. So this little diagram here represents, okay, if we want to get these beliefs here from the conscious into the subconscious, where in that state, then it'll be the opposite. It will be, we will naturally find the trade. We'll be looking at 4 different markets. We will naturally be drawn to the market that is going to have that move. So it can work against us or for us, but it all comes down to the actual beliefs. So again, super high point of leverage. We want to put this guy to sleep. So put the ogre to sleep so that we can actually take the beliefs from the conscious to the subconscious. Ways we can do that is through brainwave states. So like we mentioned, in the morning, super, super good time to do it, first thing in the morning. So I like to have something that I will listen to straight away. I don't have to decide and try and pick something. I've already got it there when I open or when my alarm goes off, out of bed, put that on straight away. And as I'm going to the toilet, I try and like kind of keep my eyes closed, try and move slowly, because the faster we move, the more we speed up our brainwave states and the less we can actually program ourselves. So you can use binaural beats as well. So what I do with the guys is I get a particular, so we do an excavation, find out what their limiting beliefs are, like you mentioned before, but I'll actually pair this with binaural beats. So binaural beats work, they have two different brainwaves, or two different speeds, two different frequencies in either ear. And this change, so you have to use headphones when you use it. This actually allows us to change the brainwave state. So we can actually put our brain in the state that we want to. There's also brilliant ones for working. Look at this one here. I would highly recommend using this one for working. It's by Good Vibes, Binaural Beats. It is one of the best, if I can add here, but Activate Brain, 100% Potential, huge, huge, huge. Highly recommend. This is what it looks like. That's what it sounds. Amazing. Cool. There you can see, just covered all of that. So we want to regulate our physiology. So going back to the physiology, so that's the reprogramming. But then in terms of the physiology, we want to be putting that on our side because, as we know, Mr. Amygdala is just waiting there to overtake the power, just to make us break our rules, just to keep us alive. So these are the exercises and different things that we can do to strengthen our susceptibility or reduce our susceptibility, strengthen our resistance against that. So breath work, super, super, super crucial. Huge, huge, huge. One of the most OP hacks we can do as traders. Again, like we covered before, breath work, cold exposure, physical activity, all of these are putting our body into that stressful state naturally. So when we can control ourselves in that stressful state, then we can actually control ourselves in the stressful state of the markets. It's just a direct transfer of experience. And in meditation, again, so one of the biggest things with meditation, apart from it actually just making your life so much better, like genuinely, if you meditate daily, your baseline level of experience for life is just brought down. So you can just be happy with less, straight up. So even if you're not fucking trying to do it to make your trading better, you just make your life better. But it actually has the benefit, the ripple effect of directly transferring into improved trading. Because as we're sitting there meditating, we are actually creating space in between the time that we have the thought and then how we judge that thought. So we're sat there observing thoughts come in, let's say. So that means when any given thought comes in, instead of just immediately thinking, okay, yes, this, my brain told me to do this, so therefore I will do this, we can take a second, pause. Is this actually beneficial, or is it just some fucking, just the ego just telling me to do something, just trying to keep me alive? It then increases our ability to make decisions, or increases our decision-making ability, you could say. And then also all just the physiological benefits: lowers cortisol, adrenaline, reduces stress response, increases serotonin and dopamine. This is why we feel better. And then most importantly, strengthens the prefrontal cortex. So we're strengthening this part of the brain so that the amygdala cannot hijack it and cause us to do things that we do not want to do. So all of this stuff here, this is all preparing our body for, or increasing our chances of following our plan, scaling up in size. Then we want to touch a little bit here on the metaphysical side. So this is the physical, like the physiological, and then there's also the metaphysical. So we haven't touched it much in this video, and I don't think I'm going to cover it here, but reality is operating on different realms, on different levels, let's say. Stuff we can see and the stuff we can't see. You have all the like the manifestation and stuff like that, but it's literally just doing the actions, doing the work, let's say, on the different levels. So without getting too wishy-washy or woo-woo, Just going to give some practical stuff on how we can actually utilize that. So we lose a trade. We feel negative emotion. Let's say we feel fucking fear, guilt, shame. We get a little bit depressed, a little bit stressed. All of this stuff is spiraling our vibration down or frequency down. It's natural. It's going to happen. Like we lose a trade. It's shit. Like we just lost money. But like we mentioned before, we don't have to suffer in that. We can feel the pain, but as soon as we can, the rate that we can actually bounce back from that and come back to either a neutral state and then eventually a more positive state, the better. Because it's not just about how much or if we feel it or not. It's how long we feel it, how deeply we feel these emotions. And the longer that we're sat feeling anger, hatred, rage, all of this stuff, we're literally just boom, 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 just bringing our vibe down. And as we know, our vibe, or if you're on the same, if you have the same philosophies, that straight up our vibe will dictate our experience, our reality. So the way that we're feeling, or our actual vibration, is going to dictate our reality, therefore our trades. So the longer that we spend in a low vibrational state, literally the more bad trades we're calling towards us, all of that. And as soon as if we lose a trade, what we want to do is bring it back up here, start to feel grateful that, okay, I have a plan. I have the ability to trade. All of this stuff, we can stop the negative spiral and then start to reverse it and push it back up again. For me, I find it much easier to come back. So like, just imagine you're flowing down a river. It's much easier to stop first and then turn around and try and go the opposite direction, as opposed to just flowing completely down and then trying to immediately reverse it. Much, much easier for me anyways, just to stop, allow the wave to keep pushing all the emotion, a little bit more calm, the water's a little bit calmer, and then we can start to try and go the opposite direction. So super, super crucial for traders to be able to do that, to be able to realize, okay, yes, I've lost a trade. Yes, this is a shit situation, but I know that this is actually just bringing more shit to me the longer I spend fucking thinking, oh, why did I fucking close early? Or why did I do that? Or I should have hit the trade. It's literally just decreasing the chances that we're going to find the next best trade. So you can just see here, these are all the emotions and their frequency. So all these ones down here are grief, like it can be grief for a trade, guilt, shame, anger, all this stuff. Here, want to get back. Courage is the inflection point. And then eventually, boom, boom, boom. And then just acceptance. This is where we want to get to in terms of our trading. We want to be trading from indifference, from acceptance. Not worried about each individual's trade or each individual trade outcome. Focus on following the plan and knowing that we have positive expected value over time, and then being grateful that every trade is a data point. Every trade we take, win, lose, or draw, is giving us more data to actually improve our overall system. These are then just physical representations of what it looks like. So before meditation, chronic drug abuse, just messing up all of the mandalas, and then after meditation. So we want to be stacking as many odds in our favor. These are confluences. These are literal confluences for trading. You meditate, we have just a negative confluence. It's just a bad, like we do not want to be trading like this. We want to be trading like this. Same with this, lots of stuck emotions, etc. I was going to say the water, the energy is just stuck. It can't flow properly. Therefore, we can't receive the thoughts that we want to, or tune into the thoughts that we want to be profitable. Once we've cleared that, breath work, breathe out all of that, clear up the space. It's literally like having a shower, like having an energetic shower is the way that I see it. If we stay consistent with those practices, we keep the airways flowing, the energy waves flowing, and we keep the information flowing, the guidance, the intuition, etc. Having strict mechanical rules, but supplementing that, adding the confluence of the metaphysical. Cool. A lot there. I'll cover that more in different videos. I don't need to get into all of this. Yeah, this is not for today. Let's jump back in and see where we are at here. Yeah, so covered a lot there in terms of in terms of mindset, and again, it's not just mindset, as you can see, it's physiology, it's beliefs. Yes, psychology can come into play, but we didn't talk about anything got to do with like Mark Douglas, etc. The one thing that I would say that is the best thing that I learned from Mark Douglas would be the whole thing of thinking in probabilities. That we want to think in terms of probabilities, as opposed to thinking, was this trade a win or a loss? Thinking, okay, were these 20 trades overall net positive or negative? The thing with that is most people don't have a replicatable system. They don't have something that they can just do over and over again. Therefore, when it comes to taking 20 trades, those 20 trades aren't all the same. So therefore, we don't trust to think in probabilities. So the prerequisite before we start thinking in probabilities is first get crystal clear on what your setup is. So we have to iron out what is our trading plan. So I don't know if we've covered this yet, but we don't need to touch on it for too much. Going through and having a strict trading plan. What do? We have to be able to explain our setup to a novice, to an expert trader, explain it in one sentence or less, explain it in 30 seconds or less, know what the difference between our rules and our confluences are, etc. So that's step one. Before we think about fixing our psychology, it's fix the system first. Then we can start wondering and trying to improve our actual psychology. So that is mindset. And yeah, crucial. Just wrapping up that section, we want to just stack as many odds in our favor as possible. We want to rewire those beliefs because we can work as hard as we want. We can backtest as much as we want, but if we haven't changed those beliefs, we will just keep going in circles. So it's super crucial to, one, spend time working on that, actually doing the stuff that will change those beliefs. And at the same time, in parallel, improving our body, improving our physiology, improving our nervous system. All of that stuff, regulating it more and more, will just naturally make us a better trader. Sweet. Then, in terms of strategy, so this is if we want to actually scale up in size. So this whole thing is about how we can actually scale our trading business. So we know that the data will tell us which setups are our highest expected value, which have the highest positive expectancy. We want to allocate risk more to those setups. Do the process, the playbook will also tell us that. It will just train our eye to see, okay, these ones are our best ones. Mindset, we just covered all of that. Want to have those two things running in tandem, in parallel, helping, adding confluences. And when it comes to strategy, we'll put it all together shortly. I just want to touch on some stuff that can be applicable to any strategy, any way of trading. So the 5 stages of the market are 5 stages that I've outlined, can be useful to any strategy. And it's just a lens that we can put on the market that will allow us to always know where we are in the market and what we can then anticipate. Which type of price behavior can we anticipate? Because with any strategy, for me, it's more important about the behavior than the rules. The rules are like, if you have super A, B, C, D, E rules, then you might as well just fucking code it and just put it into an auto trader, into an EA. We have an advantage as discretionary traders. We have the ability to use nuance and to take in different pieces of information and utilize that towards, okay, how much are we going to risk on this? Is this actually right to take this trade? So the 5 stages are the pump, peak locked, dump 1, false advertisement, and dump 2. So actually we can jump into the charts for this. And I'll just quickly cover these. So let's pull up a random chart. So 5 stages. Every market moves like this. Is we will have an origin, so where the move begins, because price is always just pumping and dumping. What goes up must come down. Like literally, this is just the way that markets move. So what we want to do is outline the pump, and then from there, all I'm waiting for is for the peak to be locked in. So for us to lock in that peak. That's the peak locked. Now, what we'll get is we'll get dump and we'll get a false advertisement. So this is the false advertisement. It's them. They've already locked in the high. Now we're pulling back, waiting for the next dump. So pump, peak locked, dump 1, false advertisement, dump 2. What I do then is I just look at these different stages: pump, peak locked, dump 1, false advertisement, dump 2. And I reduce everything down to that. And then I just literally look for particular setups at these stages. So I can have my simple rules, but I'll categorize, okay, which stage of the market are we in here? So this is the false advertisement. We've already confirmed this direction. We know that we've rolled over, broken structure down, false advertisement back up here into the EMAs, into the fib area. EMAs, fib area don't matter. It's just into the area of interest. We know we're at the stage of false advertisement. So once we roll over, boom, we can anticipate this to at least return to the origin. So, and again, we can look at here, fractal version of it. Let's look at this in the 8 hour. Exact same thing. Maybe better on the daily. And let's just get rid of this. There we go. Same thing. So we have our pump, we have our peak locked, we have our dump 1. So now we've had dump 1. What are we anticipating? False advertisement back up into this area, if we are then to look for a continuation for dump 2. So framing the market through this can allow us to, no matter what setup we're using, we can actually utilize these 5 stages. And I have a full video on this. If you go back to really, I think it's called How Every Market Moves, really, really early in my YouTube videos. You can check that out. And it's just covering these 5 stages, and it will apply to any strategy you use, but it really, really, really helps us to picture and put a frame on, okay, where are we in the market? What kind of behavior can we expect? So again, then, something we can do no matter what strategy we're using is finding capitulations. So if we want to really, really scale up our trading and really make some like crazy money, those come from when price is capitulating. So when price is exploding. So the way that we can do that is we can just reverse engineer when price does capitulate. So here, as you can see, this was a capitulation. Price just went and didn't really come back. So what we can do is we can look for these moves in the market and then just reverse engineer them. So this here is a capitulation. So what we can do is actually just pull this up and then just think, okay, what happened before this move here that could have led us to be in the know? And then just going in, deep diving, and then like just for this particular one, I can see, okay, before this happened, we had a big move down, 1, 2, 3, level 3, and then put in a W on the EMA, and then the EMA is crossed over. That's one way you can analyze it, and then you can keep going down to the hourly and just studying and just thinking, okay, what did price look like before this capitulation? Keep taking screenshots of it, and is there any way that I can actually incorporate a new setup based on that? So that means your job is then literally like, okay, I'm just finding capitulations. Here's a capitulation here. Big capitulation on the 4 hour. How can I identify that? How can I reverse engineer that so that I can participate the next time? So what I would say is, yeah, it can be really, really good to start looking at these now because they're very easy to find in the chart, finding in the area where price is just ripped or just absolutely melted. And then we're able to just look back, what happened in the previous sessions, how was the previous daily closure before that, and just anything that we can learn to think, okay, before a capitulation happens, how can I position myself in that? And the reason I mention this is these setups are the most scalable, because capitulations, it's in the name, it capitulates. So it typically doesn't give too much heat, which means that we can actually go in heavy and cover ourselves very quick. Much different to a ranging market. We don't know when price is about to have that move. And the next thing is looking at behavior over rules. So cookie cutter, we do this, then we do this, then we do this. Yes, it can work for sure. It's scalable, it's mechanical, and we do want to have certain setups in our arsenal that are like this. It's literally just rinse and repeat, bread and butter, easy money trades, let's say, just a simple scalable model. But if we do want to make exponential returns, like those serious outliers, those big money days, those year making days, quarter making days, we'll have to utilize nuance and price behavior, not just, okay, price has come down, broken structure twice in my timing window, I'm going to hit it. It's going to require nuance with maybe some fundamental factors or specific price behavior at a certain point in the market, let's say the quarter point turnover or a beginning of a new year, let's say. In these times, if we can utilize our experience and utilize price behavior, studying particular behaviors of price, we'll be better positioned to be able to actually push the risk on that and actually know what we're doing. Like push the risk, but do it in a way that's responsible, let's say. So responsibly scaling. And yeah, that's where some serious money can be made. So what I would say is if you are trading strictly rule-based, try and look at it a little bit like, okay, why am I taking these rules? Like, why am I following these rules? What behaviors is actually happening? Like if I had to describe this, so what you can do in exercise, you literally look at a particular session and start describing it. Like I used to literally write it down. Price moved up here. We trapped the buyers from Asia. London consolidated. We kept this tightly coiled volume, and then in New York we liquidated that and had an expansion. So then just every day, every session, breaking it down so we can start to really notice. The big thing is who's trapped, noticing that trapped volume, which leads us on to the next part, which is volume. So volume is a super crucial whatever you want to call it, an area in the market, you can call it a confluence, but it's super crucial that we pay attention to volume, because even if we don't want to utilize it as a particular indicator, like as price moves up in a bullish market, the volume should also increase. We don't have to utilize that as a confluence. We can actually just look at it as, okay, volume, where there was lots of volume, will be a magnet to price. So this is like support and resistance zones. This is supply and demand zones. It's where a large amount of volume was entered into the market. If we can see a large consolidation in an area, that was an area that was accepted. Price accepted that price, whether it was up high, down low. There was buyers and sellers both engaging at that price point. Therefore, that price point is valid for price to return to. So we can look to consolidations and expect for price to trade from consolidation to consolidation. That's why we can have such simple strategies like simple supply and demand zones or simple support and resistance zones, buying above, selling below, etc., because we're trading in between areas where price was accepted. Therefore, it was accepted in the past, it will likely be accepted in the future. So I would utilize volume in some shape or form, even if it's just like, even if you trade supply and demand. Like we have a very nice supply and demand strategy in the accelerator, and it's literally so simple, just on the 4 hour, just supply and demand zones. But there's an element of nuance. Which zones do you want to use? Zones with high volume around them. Again, always identifying who is trapped. So trap volume is one of the most useful things we can look to utilize. If we can see who's trapped, we can then identify, okay, who's going to get eaten into next? Because if the volume is trapped, price doesn't have to return from there, doesn't have to return to that point, and we will just boom. We can fucking have very violent moves. So the most violent moves, the most parabolic, exponential moves will come when the majority of people are trapped. So we've gone up week 1, week 2, week 3, false break, high of the month, sideways behavior, and then just on a Friday, capitulation. Just absolutely eating and just melting. The arse just falls out of it because everybody's trapped. The damage is already done. They don't need to keep pumping price back up, etc. The move has been, the contract has been signed, let's say, the deal is done. So being able to identify trap volume, super crucial. Then the most important part, so putting all of it together. So this is crucial. So now once we have our data in place, we have the process nailed, our weekly flow, all the actions that we're completing, all of our trader admin tasks, let's say, we're taking care of our body, we've got our physiology in check, we're rewired our beliefs, we're doing everything. then it literally just becomes a game of identifying the constraint. So we do everything, and then we just track the data and see what's broken. So let us jump into it. So that we can say we have all things in place. Our job is to identify the constraint. So to summarize it in one line, it would be to calculate our expected value. So this is taking into account that we have done everything else. We have all of these things checked. Then our job is simply to calculate the expected value, make one change at a time, recalculate the expected value. Did the expected value rise or fall? And then repeat. That is literally the process that I take the guys on. And that's why their success is inevitable, because that's all we're doing. We're literally, first of all, getting everything in check. So making sure all those boxes are ticked. And then once that's done, it's literally just literally a matter of doing that, just making that one simple calculation, changing one thing at a time. And yeah, and that's why we overcomplicate things so much as traders. Like if we would just reduce it down to that, and we actually just use data-driven decisions, it's again, yeah, it is inevitable to be profitable. So for the way that we actually identify that, this is the process that we want to go through. So first of all, we want to figure out what is the constraint, and maybe there's a different constraint than data. So when we're doing this calculation, this is assuming that everything else is in check. Let's say that we're actually showing up on time, that we actually have a set of rules. All of that's prerequisite to this. So before we can do this, we have to go through this process and realize, okay, are we actually ticking those boxes? Like, is data the issue? Is strategy the issue? So we start off with a simple question. Do I have an edge? If the answer is no, this is the process that we follow. So we want to, again, I recommend a simple support resistance strategy. You can use a simple anything strategy, like literally just, you can use 4-hour supply and demand zones, support resistance, if I can EMA crossover, anything. Super simple, basic rules. And I would recommend 1 to 2 pairs max, because again, if you're not already profitable, why are you trying to trade fucking 10 pairs profitably when you can trade 2? I would backtest this strategy for 1 to 2 weeks, show up every day and forward test it on demo, and then add all those results to a journal. So, and then remember, the important part is adding it to the journal the way that we mentioned, where we can actually utilize select options so we can filter that data and see patterns. Forward test that, add results to the journal. That should be down here. And then from there, we calculate the expected value. So we keep adding data, and then we calculate the expected value. From there, change one metric, recalculate the expected value. If it rose, keep that change. If it fell, disregard that change. That is how we will fix the strategy, whether or not we have edge. Edge is defined by a positive expected value. So if the expected value is above 0, we have edge. Once that's done, we'll of course continue this process. We will keep testing, changing one thing at a time, seeing if it rose or fall, repeating. So we're constantly improving our edge. But first of all, we have to have edge. We have to have that above 0. So if it's not, pick a simple strategy and repeat that process. So that keeps going in tandem. And then if we have edge and we're still not profitable, this is the process that we follow. So do we believe in our ability to execute this edge? This comes down, this is questioning our belief systems. So the answer is no. This is what we do. You might laugh at this. So genuinely, psychotherapy can be one of the most useful things. Both myself and Nicola have spent a very, very, very long time in psychotherapy, just analyzing our own thoughts, figuring out what is going on inside there, what's underneath the surface, let's say, what's behind the curtain. We can use GPT. Nicola actually built a brilliant GPT, a psychotherapy custom built GPT that we can utilize ask it to ask us questions. That's where the superpower in AI is. Give it the proper prompt and then get it to question us. So then it will actually act as a psychotherapist. And then all we got to do is give the answers. And we're actually feeding it, getting that feedback loop going. And then we can really uncover our shadows, let's say. So we can ask it, I'm a Forex trader. I'm aware that I may be trading with unconscious motives and beliefs. Can you help me to identify and work through these? And then you get that loop going. Add action steps for how I can work through these and stop self-sabotaging. So work on subconscious programming. We've already covered that. Binaural beats, affirmations, repetition, hypnosis to do that special stuff, like really change that belief instantaneously and make sure we're supporting that with the actions. And then if you're into this, mushrooms. So this can be a brilliant circuit breaker where we have a current belief system. We just shake the box up, imagine like Humpty Dumpty, and we have the ability to then put it back together in the way that we actually want. So the ego is almost definitely self-sabotaging you in some way. Mushrooms are a brilliant way of actually breaking that down. Can, of course, like cautionary, be too much to the fact that it's like, holy fuck, we just lose confidence in ourselves. We completely change our view on reality, on ourselves. And there can be a turbulent stage in that. Things often have to get worse before they get better. But for the long play, a long run, both myself and Nicola have benefited massively from ceremonies and certain plants. So that's in terms of the belief systems. If we don't believe it, that's everything we can cover. And then if we do believe it, but we're still not profitable, this is the next question we ask ourselves. Am I showing up each session on time and prepared? If it's a no, again, use the toolkit, the FXOS, use your own workflow for what you need to do each week. What are your admin tasks, your weekly review, your daily report card, your weekly forecast, monthly review. Show up 15 minutes before the session. Make sure you're meditating. All of that kind of stuff they're prerequisites. They have to get done. It's non-negotiable. And then if you are showing up to each session on time and prepared, but not profitable, take a break, bro. Take a break. Simplify your rules. Your emotion baseline is likely out of whack. So this, for me, initially, like 2.5 years in, I was just a complete crackhead. Like genuinely, I could not hold a trade for the life of me. And I work with some guys that are like this. And it's a very easy fix. It really is. Like we cannot be in that crackhead state where we're taking trades, feeling the adrenaline, fucking can't follow our rules, jumping into volatility. It's because our baseline is off. So take a break, relax, do some meditation, don't think about the charts, come back a new you, a better you, a more relaxed, and it will just do wonders. Work in your process. So use the toolkit, use anything you have to basically, again, put all of that stuff in place. So do a deep dive, into your psychology. Literally sit there and map out, okay, what's going on right now? What are my current beliefs? Do a big quarterly review, a monthly review. Look back at the last few weeks trading. Where are you making those mistakes? Identify those, fix them. Again, look yourself in the mirror. Make a commitment and fill out the daily report card every day. So the way that the guys get profitable, the way that I got profitable, is again having a conversation with yourself and deciding to follow your rules above all else. That is literally it. It's genuinely that. Like until we put following the rules above making money, we will never be profitable. Never. So that has to happen. Has to happen. It has to, dude. Like it's genuinely. It's not a question. Like if making money is above following your rules, you will forever fall susceptible to all of those traps and tricks and everything, and just continue to self-sabotage. So look yourself in the mirror. Decide. First of all, you've already outlined your rules. Follow them above everything else. Fill out a daily report card every single day. Track your data every single day. And then at the end of the month, we have the data to work with. We can look at it and see, okay, what's broken, what's working, what's not, and then make adjustments based on that. So when you finish your break, put more emphasis on following your rules than winning, as we mentioned. So That is everything. That's all that we need. And again, we can see that it's objective. It's not this mysterious thing. It's not the destination that we have to reach. It's putting all of those stuff in place and then having that monthly review, thinking, like we just said there, looking at the data, what changes are actually adding to our system, what are making it worse, making more of those, less of the other. Rinse and repeat. Gathering the qualitative data, so doing the daily report cards, weekly forecasts, all of that kind of stuff, the trader admin, pre-market game plans, recaps, everything. And then the quantitative data, the actual numbers, so tracking only the important things, deciding what experiments we actually want to run, forgetting about everything else, blocking out all of the noise. So just thinking, okay, these particular experiments are the ones that I'm running. How do I need to track that then? Which metrics do I need to be tracking to actually give me that result so I can actually test my hypothesis and see if it's good for EV or bad for EV. And then it genuinely is just a process of, okay, this is it. And it just condenses the time completely. It just removes the randomness. So that's it. That is everything. Utilize your data. The sooner you utilize your data to make your decisions, the sooner you'll be profitable. And again, you can do it instantaneously. Like you genuinely, like we said, it's easier to change fast than it is slow. I wish you the best of luck.